into the new year, somebody was talking about gold to the upside. That was me. These were the first two targets I was looking at, with the third one being the very top of a heavy commitment zone. 82 starting the floor there, 23s being the top, and we got a little bit further, a little bit over the round number 1300, and then that was it. So one of the things I mentioned was to watch breaks below 87 and 82s for signs of weakness once we got up into this area here. And so however you slice it, resting order to exit or trailing and exiting on a rollover, and then below this area really looking to go back to 43s. So at that point, short opportunities come in. And now this action right here is really negative for gold. Since I'm flat gold right now, that's not so bad, but I know it's bad for a lot of other people that don't have risk control and are trading gold based on their idea of fundamentals rather than anything that's got a systemic edge to capturing profits. So this move up here from gold was really perfect. It blasted out of a very key commitment area that used to be a Fibonacci forecast zone that's turned into a heavily traded area. Key resonance here at 1243s. You can go back and look at all my old gold charts where I talk about 1243s before we even got here, and then since then it's been a key trading point. Well, here's exactly what you want to see to go long. Price blasting out of that zone. That is fantastic stuff. It plays very nice with the balance beams here, and it gets into the 82s, 87s, even a little bit more, and then it can't hold that floor of 82. It starts to break down, it finds resistance at 82, and then it does not find support at 43s. It slices through right there. That's a big red flag, that action right there. Another red flag is a resistance swing now being put in at 43s. Here's the follow through we're getting this morning. A little bit lower, and we'll go into the second phase of this area here and likely pull down to the round number 1200. As key price points go in this area here, remember 1204 and 1215 were two numbers that I'd been using as trigger points below. They'll likely be key targets on our way down. But that's why gold is so negative, is because it was not able to hold 82 as a floor, and it was not able to hold the 43 bounce. Plain and simple. As ratios go and impulses go, the directional move here is really nice, and what a lot of people will think about are retraces and what are typical tendencies for retraces, which typically happen between the 382 and the 618. Sometimes they go deeper, but the breadbasket of retraces are going to be between the 382 and the 618. So basically, three zones to watch there would be the 382, the 50%, and the 618. We're at the 618 right now. So this impulse here, its actual length, which I did not create, the collective of all traders formed that by what's ever encoded in them trading, and me and you and whoever else is trading gold. The pullback levels and where the fib ratios relate to what's happened in the past is something that is pretty fascinating. The 618 coming in here at this key level of 22s where we are right now, this would be a good area to look to for a bounce. As a pure ratio goes, that's it. It's pure math. What ratio traders don't have is horizontal information, and by that I mean strength of signal. So you could certainly get it with price moving up and some kind of indicator flipping bullish, whatever it is, on a smaller time frame, even like a 45-second chart with a 7-period RSI and a moving average, whatever. You could come up with some way to handle it. But what you don't have, and what most people don't have, is this. There's a fair bit of trading commitment that's developed at 30, and we've got a pretty good bounce to go from 24s to 30, but that's aggressive being long here off the ratio level without respecting this. So that would be something you got to watch, is price taking over 30. And then again, here at about 30, threes or so. So it's got a big swatch of commitment just north of where it is. That makes it tough, and that's putting more light on how negative this price action is for gold. Yeah, the good old bear on gold here back in the swing. Just look at the chart. I don't have a predisposition either way. Love it for gold to rally, but I'm not going to put lipstick on this thing if it doesn't deserve it. So, the benefit for gold is that it's taken over the round number 1200. The benefit here is it blasted over 43s, and that's a catalytic move there if you've ever seen one. Look at that. But it's been completely undone. They've traded below the inception of this power candle. They traded below the breakout level. And in moving up through this zone here, they got up into the very important stuff over 1282. They weren't able to hold that. Weak, weak, weak. Very bad action. I mean, that's horrible. So where it is now is this is going into the last phase of whether this thing is going to be able to hold. Here's the 618. Look at the 786. That's at the dominator here at 1200. So this area here breaks down. It's going on a $20 haircut, and this is going to be the last opportunity for this impulse to remain bullish, because if they break up below 1200, very good chance we're going to retest the lows, and at that point this impulse has completely lost its energy. So what's gone from looking like this incredible turn of events here for gold is now starting to get pretty worrisome, because if they don't hold it at the 618, we're going to 1200, and below 1200, look at the trading commitment. It drops off sharply. So just like the S&P can break out and go on some new runs, so that's why it's so negative for gold. This view here is on a 120-minute chart going back 120 days. Commitment here, commitment there. This commitment now taken over by the bears. So, and all this lost. Here's the next phase, is to go to the daily chart here. I'm going back 700 days, and now you can see more how important that move up was and that abandonment. Here's where you really get the power to know that you want to be out of this thing as it moves up and doesn't hold on to the dominator here. Going back 700 days, this move here was huge to the upside. And this breakdown here, great short opportunity, great opportunity to take your profits if you were long, but here's where things get very bad. Most bullish would have been to keep 82 as a floor. Then second would be to make 65s as a support swing and then go up and reattack this and off you go. Neither of those things happen here. They just break it down. They don't hold at 43s. And you can see on this chart, we're below all of the colored red and blue commitment, which is the more intensely traded areas. So that's very, very negative for gold. And for this retrace, I was looking at the directional impulse that blasted us over 43. If I wanted to go absolute, I could do that as well just by doing this. And magically that pulls down the 618 to the last key balance beam here, and it also moves the 50 to where the 618 was and pulls the 382 down to 43s essentially. And another thing is on this daily chart, this downtrend here pretty much still in gear, however you want to slice it. You want to give these two absolute and say this is a little bit of a head fake, fine. You want to say, well, this is now the macro and this one came close and got scared away, fine. Either way, there's this downtrend energy that's capping any bullish moves up, and that's been the story for gold for quite some time. So love to be a gold bull here, and actually threw out some bullish trade scenarios that went very well in favor. Targets 1 and 2 nailed, but beyond that, look at how price resonated at the zones that I talked about. 43 was the key catalyst to seeing price jettison straight up and breaking back below 82. The floor here, that was the catalyst to it filling back through this air pocket where there's not as much trading commitment. So at the end of the day, all that you can hope to have and all that anyone has is the two words if then combined with what you see. Anything beyond that is 100% vapor. So if you're trying to associate where gold should be based on the euro, the dollar, what some geopolitical tensions are, what some banks are doing in Europe or not doing, any notion of what the central banks might be doing, what India might be doing with retail jewelry, what manufacturing might be doing, or defense industries might be doing with gold, or biotech with the inert properties. I don't care about any of that stuff, and you shouldn't care either, because it's irrelevant to what price actually does. That's been the story that I've been telling people about gold since I've been showing charts. It's the same story for any trading instrument. So don't think about it as gold, think about it as a trading instrument. That'll free up your mind so that you can actually follow what you see on the chart. So gold, really negative, let go of some fantastic bull energy here. And really below 20s, you can pretty much count on a trip down to 1200, and below 1200, we might be going much lower with a break below 1200. It's not just a retest of structure here. This test of 1130, this fell short of where price should have gone based on the weekly and monthly projections that I've made. So this new low here was the one that really got me thinking about a new long scenario. With this letting go and taking 1200 out, a retest of this low here would have a very high probability, but a break of that as well, and new lows altogether. So that's what's happening with gold. You also know from that 120-minute chart that there's resistance $5, $6, $7 north of where it is right now. So while there's a zone where it could find a bounce, you do have a lot of work going back up. And at this point, at 23s, you got to get over 43. That's the bottom line here. You got to get back over 43. So really, really negative action from gold. Okay, my auto trader just got me long oil here, so we may as well take a look at that. For starters, we're at new structure lows on a big sell-off. That's just a monster sell-off. So I'm not at a DSR level. That's a bit aggressive. I do have white candles, and I did take out the black fib dots here. I'm over 50, so I've got 3 strengths of signal going. So I want to look to guard my position here because I don't have a DSR. I'm going to book 10 on one and see if I can get 15 on the other. So I've got a good gain booked on this trade already. Where it is right now, it's gone overbought. It's put in SOS, see the black arrow, then it's gone turning point. So it's put in the inkling of an end of move.